Today, we'll review what 3 institutional Tesla analysts are saying about Tesla. First up is Simon Hale, portfolio manager and senior wealth advisor at Wellington-Altus, who absolutely counters the negative Tesla reaction. Second, we have Junheng Li of Warren Capital, who's saying that Tesla's focus on FSD is paying off, changing the company to an AI-driven one. Finally, we have our fan favorite Dan Ives of WedBush Securities, who continues to point out Tesla's the most undervalued AI play out there. We also saw Piper Jaffray raising their price target from $205 to $300. I got Larry Goldberg with us. He's a multi-entrepreneur. And so Larry, these 3 seem to get it. They get the story. There's been a few others, obviously, who's still not understanding what Tesla's about. What's your thoughts about the institutional analysts and how they reacted to the earnings call?
Well, you have the traditional institutional analysts that measure the company by the bottom line and other financial parameters, listen to the call very carefully, do their projections, and come out with a number. Then there are the guys who actually look at under the covers what the company is about, where it's going, what it's doing, and whether its leadership is capable of executing. I think the 3 we're going to see today are the latter, and I think they actually understand what Tesla is doing, that it's not a car company, that the cars are just the enabler of this future software-driven world, and that the software-driven world is changing what the vehicle is to society. So I think that they understand it, they get it. And so it's very interesting to see this dichotomy amongst them and to see who comes out of it, best.
All right. So we're going to have Simon Hale, Dan Ives, and Junheng Li. I've had Simon Hale and Dan Ives on the show several times already, and I'll get Junheng Li. I'm going to see if I can find her. So Simon is a portfolio manager, wealth advisory for Wellington-Altus. We've started to get to know him better, and he's fantastic. So let's watch his video by Yahoo Finance.
Our top story today, shares of Tesla are falling after the company reported mixed earnings for the second quarter. Tesla made less money per share and missed analyst expectations. Tesla CEO Elon Musk was forced to address questions surrounding the slowdown in EV sales and the delay of its robotaxi debut. Shares are off more than 10% since the start of the year, but our next guest still thinks the stock is a buy. Here with more is Simon Hale, a portfolio manager and senior wealth advisor at Wellington-Altus Private Wealth. Simon, Tesla is one of your largest holdings, and you are bullish on the long-term outlook of this company, but we are seeing those disappointing earnings drag the stock lower today. Were there any bright spots for you in this report, and did the low energy and more subdued demeanor of Elon Musk on the call concern you at all?
I thought it was a great call. I walked away with no disappointments. Elon Musk and company, they've laid out on this call, they were quite clear, and they laid out a plan to get back to 50% earnings growth by 2025. And sort of, you can do some back of the math calculations, but they're talking about FSD being approved by regulators in Europe and China. That could bring an extra $1 billion to $2 billion next year. We're looking at Cybertruck ramp, possibly 200,000 units next year. There's another $2 to $3 billion in profits. But then you look at energy, and Tesla Energy is going bananas. I don't know if you've looked at the charts or the deck that Tesla put out for this quarter, but there's just this bar line going straight up with Tesla Energy, and they did almost $900 million in profits. Just this quarter, deploying almost 10 gigawatt hours, and if you can duplicate that next year, there's another $4 billion. So, if you just put this in perspective, trailing 12-month earnings were around $12 billion, and on their existing footprint, they've laid out a plan for over the next 12 months to be able to grow that by $8 billion. That's 50% growth going forward. And I think that Musk and company have laid out the groundwork to move this train back to a 50% growth rate to the end of the decade. And the train's starting to leave the station. So we're quite excited.
Don't you love that? Isn't he great? He said 50% growth rate in profit And then also 50% growth in volume, because there's a line that you and I were looking at saying that Tesla expects to increase their capacity for vehicles on existing factories by 50% to 3 million. It's already available.
Right. And you know, I mean, he didn't even touch on, you know, Optimus, which is, you know,
Right.
it's sitting there and it's about to come. So, I mean, he touched on the near term impact of FSD and the new vehicles, but and energy. What he didn't touch on is, you know, sitting in the background is Optimus. So, I mean, it's a very exciting moment, right? But, you know, we have all these other guys who are saying this is terrible, and you know, it's fair enough. This is their business.
Yeah, let's keep watching him.
But Simon, what would you say to critics who do not trust Elon Musk as a leader? We've already seen the delay of that robo-taxi rollout. He's talked about cheaper EV models coming to market, but even that hasn't come to fruition yet.
Yeah, I think Elon's extremely optimistic, but I don't think there's a leader that can push his employees more than Elon does. So, you know, whether it's 8.8 or 10.10 with the robo-taxi event, I don't think that's going to matter. All of these short-term headwinds are just nothing burgers when you look to the end of the decade. We're looking at a deca-trillion-dollar opportunity here, and to overlook that this early in their growth stage, I think investors would be disappointed if they didn't own a piece of Tesla in their portfolio. And in terms of the new low-cost vehicle, again, all of these are completely new products that have never been done before. So the Cybertruck was late getting out, but it's a fabulous product. And I think I've seen it in a million rap videos, and every star in Hollywood wants to drive this today. So that thing's doing extremely well. And if we look at their Tesla Energy, which it's kind of boring, but the demand for this is quasi-infinite. And Elon talked last night about how Tesla Energy, the Shanghai factory that they're building, could be 2 to 3 times as large as their US production. So that alone, just think about this for a second, Alex. In the last 12 months, Tesla earned roughly $16 billion in profits. And if they're able to ramp up these megapack factories at the rate in which they're currently going, they could do $16 billion in profits just in their energy by 2027. I mean, that's bonkers. So we see a lot of great things for Tesla going forward. And what's really interesting is when we're looking at their battery packs or their Tesla Energy, is they basically built out a model, and they thought about this a long time ago, that whatever excess battery capacity that they can receive from other manufacturers, if they don't need it in their autos, they're going to put it in the mega packs. So right now, as the legacy automakers are pulling back on their demand or their orders for EV batteries, Tesla is picking them up at pennies on the dollar, putting them into these mega packs and selling them at a 30% plus profit margin, which I think is absolutely brilliant. And what it's doing, it's smoothing out the earnings for their auto earnings. It's smoothing out their auto earnings through a period of high interest rates and a slower economy. So it's really brilliant what Elon's been able to do.
Oh boy, he is brilliant. I love Simon, of course. He comes with numbers and analysis. Do you know how he knew all that? He was listening to you. He learned a lot about the energy from you, he was telling me. So I'm telling you, you've done a great job to breaking all that down. What's your thoughts on what you just heard there?
Well, I think it's great. He's obviously given this a lot of thought. And as a, investment manager, he has to be awfully careful. He has to be absolutely certain of his thesis. He has to defend it, and he has to ensure that what happens is what he said is going to happen, or he has to be aware of any changes and risks. And he's a cautious guy, but I mean, he definitely understands his subject, and he's drilled down to it to this great degree. The fact that he listens to retail analysts or retail shareholders who are also analyzing the company is really encouraging, because quite clearly, the retail investor was dramatically ahead of the institutions in the first run-up for Tesla, and I think that we're going to find it happens again. As it happened in history, it's going to happen again in the future.
He did tell me that he appreciates the retail investors like you and others to understand him, because there's just so many brilliant minds. And he says, I can't believe that a few other institutional analysts aren't digging deep. And so, of course, Dan Ives is also one that listens and takes that. That's why they're bullish as well. Let's listen into the rest of Simon Hale's conversation here.
You're clearly bullish on the long-term outlook. If you're not an investor today, should you get into it right now at the levels that we're seeing?
Absolutely. Absolutely. I think that this is a fantastic entry point. I look at it as almost a gift, seeing the stock price being down here around $217 today. We'll probably look back on this similar to if you look back on Apple in 2011 and split adjusted, it was trading around $20. Everyone wishes they had the insight or the foresight to be buying Apple at a time. And people were criticized. We were criticized for buying Apple in 2011. Our clients are not upset today for that decision. So I think this is going to be very similar. What's happening right now is we're having a convergence of multiple technologies that Tesla's involved in. And you're talking AI, you're talking the cost of batteries, the cost of chips coming down. And you have a company that's taking all of these cost savings and driving them into their new technologies, and then implementing AI, where all of these cars are effectively robots on wheels. It's pretty exciting. I'm actually thinking about the movie Knight Rider 40 years ago, how we had talking cars, and I thought that was pretty ridiculous. And I think we're not too far off where we'll have cars. I'm predicting robotaxis by 2027. With an AI-generated voice command, which is going to be pretty neat.
All right, we'll see if flying cars are in our future. Tesla shares, though, off about 12% currently. Simon Hale, portfolio manager and senior wealth advisor at Wellington-Altus Private Wealth. Thanks for joining us.
Thanks for having me, Alex.
Great interview. Yeah, final thoughts on that. I love that he's telling institutional investors, if you don't have this in portfolio, you better put it in now. That's just what we need.
Yeah. He doesn't lack any courage. He doesn't lack courage of his convictions, which is fantastic.
Okay, let's go to the next one. I've not listened to Junheng Li of Warren Capital, and she's saying that Tesla stages $386 billion comeback as Musk elevates AI over EVs. Let's listen into her.
FSD so closely?
Because the car sale data are very transparent, and it's obvious that the car sales has hit a wall, whether in California, in China, in Europe. So in California, the data are very transparent. Sales down 24% year over year in Q2, and California being 25% of the US EV sales. And in China, it's down 7%. That's on top of very aggressive promotions. In Europe, it's a different story. There's a tariff coming up. Now, the Chinese-made car going to Europe starting this month will face 20% increase in tariff. So at this cross current, Tesla all of a sudden pivoted its story from EV sales to FSD. Essentially, FSD is a story of, okay, you buy a car, I give you a driver. So that's supposed to be a differentiation for Tesla car to get more share in the market. But it is our view, after speaking extensively to the researchers in the field, as well as the competition's AI effort, that it's a very immature product. It takes time to get higher quality data, probably a rework of the underlying narrow AI system, and waiting for more GPU cluster for this to work.
Full self-driving has actually been something both Ed and I have been playing with a lot, lucky enough to be able to do so. But why do you think the underlying technology, the overall scale of investment that Tesla needs to make, is so much larger than the market is factoring in? Because this is always the long-term bet, that Tesla is an AI play.
Yep, because Tesla's AI vision is a little bit different from everyone else. Everyone else in the industry relies on sensors in addition to the underlying AI software. But Tesla wants to differentiate itself as a unique play in autonomous AI. Therefore, it markets as the end-to-end vision-only AI play. But if you talk to people in the area, they'll tell you that it's a very difficult route because it needs a lot more extensive data input, and it requires a much more extensive AI system to truly get you to L5. So now you have this very big operation domain design, and you have limited hardware tool, but you want to achieve L5. So that's a very, very tall order.
Yeah, let's pause there. What's your comments on her analysis?
Yeah, I think that it's not bad. You know, I heard her say at the beginning that they're going to have to redo the stack. I didn't really understand that. But, you know, here is an analyst who's really focusing on what is important, what is the story, as opposed to where so many of the analysts who create their own, you know, dry analysis of the actual auto company and look at the auto company as being the principal focus of Tesla. And that, you know, that's what distinguishes these three analysts that you're talking about, because they understand the whole story as opposed to constantly focusing on this narrow, you know, historical aspect of Tesla or the roots of Tesla and not understanding where Tesla's going. So this is a very important analyst from that perspective.
Appreciate that. And by the way, Simon Hale's video, in this video, you saw volume bars. You hear this typing. It's not from you. It's not from Larry or me. This came from the actual video. So don't, so they'll say, Herbert, stop keyboard typing. And I'm not doing that. All right, let's watch Dan Ives. So Dan, of course, is one of our favorites. He was on Bloomberg. Dan the Man, your favorite. He's been on our Cyber Bulls. You know, he's a bull. He's a long-term bull for Tesla, but he was pretty critical of Tesla and Elon the first half of this year, first quarter. I had him on. The Tesla retail community was upset with him. But it turned out that, you know, he was saying that his only concern about Tesla the first half of this year was Tesla is not communicating their benefits well. And Elon continued to fumble these quarterly earnings report. And of course, as an institutional investor, the audience of these earnings report, he says, you got to do a better job. He was complaining. Now, as we saw in the last annual shareholder meeting, when Elon is very on it and he's you know, he just turned the whole thing around. So he's correct in that point. Yeah.
And, you know, that's why I'm so fond of Dan, not because he wears those great clothes, which he does, but really because he understands this aspect of, you know, the Tesla ethos. Tesla is Elon. Elon is Tesla. When Elon is argumentative, when he is, you know, truculent with the analysts who don't get it, and most of them don't get it, and most of them don't understand it, he gets truculent. He gets, you know, antagonistic, and it, you know, it's not helpful, and the public don't find it helpful. So Dan is right. And by the way, it's my critique of this last shareholder meeting. Elon wasn't the same bubbly, you know, excited, optimistic Elon. He was the guy who was telling him, look, you guys are not getting it, you know. So anyway, let's listen to
even
Dan.
in the last quarter of the earnings, he became back to neutral or just whatever his mood was like. So let's listen to Dan Ives.
The market reaction we're seeing in Tesla today, it's pretty extreme. How much of this is because Elon Musk tried to pivot to this idea of robotaxi and then couldn't deliver because he had to delay the whole event?
Yeah, I mean, I think it sharpens the knives between the bulls and the bears. Because the bears will argue gross margins missed, price cuts continue to happen, and lower ASPs. But in my opinion, this story is about AI, robotaxi, robotics. And really, actually, a price stabilization that's happening, and I think demand that ultimately is starting to turn the corner in China. So for me, I'm actually more bullish today on the Tesla autonomous robotaxi story than 24 hours ago, because you got the date. I think outlined maybe what I believe is going to be sort of the prototype and actually pretty bullish on where they expect to actually start to see a dent. He said later this year, I think potentially into next year.
All right, we have a date for the event, which is October 10th, but we don't have a date for when things actually get going. And he's notorious for kind of pushing things off into the future. In the meantime, Tesla doesn't have enough of a lineup to really get people to come in and buy its existing cars. So what does Tesla do until the robotaxis really trickle down to the bottom line?
So you go back 3 months ago, obviously stock's 140, the bears thing is going sub 100. Look where it is today. So the point is, the reason we are where we are today is investors are now starting to recognize the AI story. I think Tesla is the most undervalued AI play out there. We think AI alone could be worth $1 trillion to the name, as also this name is stabilizing from a demand and pricing perspective.
I'm going to ask you what Elon Musk has been asking users on X. Should he invest through Tesla $5 billion in XAI?
We've said it, we've talked about publicly, this is a no-brainer. Because to me, it's all about Tesla further and further doubling down on the AI story. And I think that's what investors want to see. I have never, from the beginning, viewed Tesla as an auto company. I view it as a disruptive technology name. But that's why, look, the bears are going to come out today. They definitely on the margin miss. That's why the stock's down. But I believe we sit here weeks, months from now, and investors now start to focus more and more on 10-10.
Love it.
Nobody can say it better than Dan. I mean, he has this golden tongue. But the point is, he does understand it. He gets it. He sees the essence of it, and he makes it very clear. And so, I don't want to gainsay anything he says. Just play it again, Sam.
Well, I'm not going to play it again. The weird part, again, it's just like I just showed you 3 institutional investors, and here you've got Piper Jaffray raising Tesla price target from $205 to $300. That's a massive jump. Yeah, now, of course, they were behind, so they needed to catch up also, which is typical of these institutional investors. But my point is that the stock fell massively. So it's like you get this. Us listening to this, a few institutional investors listening to this, and we see something, but others, like he was explaining, short-term, auto gross margins fell, the world must be terrible. And I think the narrative is that the next 3 months, they don't see any catalysts. And so they go, okay, even our friend, Pierre Ferragu, I'm going to have him on a show because he said, I need to explain to people what we do. And he said, Pierre Ferragu which is a bull, put it to neutral after this earnings call because he doesn't see things. And I'm like, well, we'll talk to him. But it's like, what do you mean? We have a robotaxi event. Not that it will be a catalyst, but it could completely change the whole thing about what Tesla is about.
I think 1010 will be a catalyst, but a catalyst in a way that not many people think about catalysts. I don't think it will lead to the share price jumping 20% the next morning. I think what it will do, though, is do what so many of these events do, is that it will embed in people's knowledge, in people's minds, the knowledge of what this business is going to look like. And it'll be a reference for them as the business rolls out, for them to begin to understand where it's going. And, I've started to reevaluate my negative views, not negative views, my views of the negative outcome of these Tesla events. My views have always been, they're great for me and they're great for the cognoscenti, but they're not great for the investing public because the investing public go to it, they don't understand what's being said. They said, I don't get it. I better sell the shares. And classically, these events always lead to a downturn in the price.
They do.
But what I've seen, though, is that these events leave a pattern, leave a roadmap in people's minds. And so as that roadmap begins to unfold, so they begin to appreciate it. So I think we'll see a similar pattern. We'll see concepts, ideas, we'll see the shape of the car, we'll see, some ideas about the design of the car, and the next day the stock will tank because they're not being delivered tomorrow or it's not happening tomorrow or some other negative thing, but it will give us the roadmap. It'll embed in our minds where it is the company's going, and that will have a long-term, a medium-term, very strong impact on the share price.
Yeah. When I ask people what's going to happen, you have people that say, like you, right? It's not going to make the stock. It's not going to make the stock jump. But some people think that there's some institutional analysts who will say, I just, like Dan Ives, I just need to see the plan, the structure of the business plan, and then I'm going to invest more. Others say, not going to invest at all until the moment, the time when somebody can actually pay Tesla money, a commercial event occurring. That's the only time that they'll do this. It's really live. They can actually have the pricing and all that. I think in this case, people will start to realize this is real, and you will start seeing some jumps.
It's a crazy way to invest, is to wait for the stock to go up before you put the money in.
Exactly. There you go. Boom. Thank you so much, Larry. Follow him on X at Tesla Larry. Sometimes. Thank you. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.